Good afternoon, everybody. Welcome to the meeting. Mr. Woolley is joining us as well. Before we turn it over to our chairperson, I just wanted to give everybody the standard warning. This meeting is being recorded, and this meeting will, after it's concluded, it will be placed on our YouTube channel for the public, and we will have certain members of the public join us today or have indicated they will be joining us today during the meeting to observe as well. So with that, I will turn it over to our chairperson, Audrey Carter. Audrey?
Thank you, Jeffrey. And good afternoon and welcome everyone to the February 24th meeting of the authority, as Jeffrey mentioned. You'll notice two new faces that are actually part of our board. You'll recognize the mayor who is on here and obviously know Mark Woolley and Marita, but let me introduce the two permanent faces that have joined the authority. One is Anna Marie Sassong, who is, I can't tell you what square she's in on it because it's different on everyone else's, but we approved hiring her as general counsel at the last meeting, and she officially joins us today, and we put her to work right away. And so I firmly believe that location is important, but timing is important as well. And having her on when we did was important timing. And the other face that you may recognize is Dan Connolly. He has been with the city, financial advisor with the city for several years. And as we move to the first item on the agenda, we'll tell you why he's here. On February 19th, the authority received a request from the mayor to accept his recommendation to appoint Dan as the new City of Harrisburg ex officio appointee to the authority board, replacing Neil Grover. Dan seems eminently qualified for this role, as he has been, quoting Mayor Papenfuse, instrumental in working through the financial projections for the city. In his day job, Dan is a senior advisor for Marathon Strategies. He has over 15 years of experience in all facets of local government financing and transaction, and actually has extensive experience with Act 47 Distressed Municipalities program. As such, he knows Marita quite well, and she speaks very highly of his talent. I would like to ask for a motion to accept the mayor's request and acknowledge Dan's appointment, which will run until a new director of finance for the city is hired. Kathy?
So moved, Madam Chairman.
A second. Thank you. Any discussion? All those in favor say aye.
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 Opposed? Motion carries. Welcome, Dan, and thank you for agreeing to serve in this role. I know you're gonna enjoy it. It's a light lift, don't worry. We have a full agenda today, so let's turn to the approval of the minutes right away, which I hope everyone's had a chance to review. I'd like to ask for a motion for the approval of the minutes for the month of January.
I'll make that motion.
Thank you, Ralph. Second.
Second.
Thanks, Doug. Any comments? All those in favor say aye.
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 Opposed? None. Motion carries. Jeffrey, could I ask you to give a report on the authority's business over the course of the prior month, as well as give a brief report on our residency?
Right. So first, our paid bills. We had 4 invoices that we paid this month, including we renewed our domain registration for our website, which is hbgica.org. So that was due for re-registration, and we paid that bill. Our starting balance at the beginning of the period was $87,008.86, and we completed this month's transactions with a balance of $82,672.66. So that's what we have currently. We've earned $1.50 in interest for the year 2021. I've been in contact with Beverly Hutzel, who's on the line here. Beverly says that our request for the second part of our funding through DCED is pending. And that's good news because we keep spending money. So at some point, we're going to need the balance of that allocation. So we thank Beverly and our friends at the Governor's Center for all they can do to support the activities of our organization. In addition to that business, I do have a second item, as was referenced by Chair Carter, which is that we have been talking for the last month with our new general counsel about potentially securing a new legal address for the authority. So just to remind everybody on the board, since our inception, we have been using the legal address for the authority of Mr. Jeff Engel's offices. Jeff Engel was our former general counsel. And believe it or not, there's a number of different important things that require having a legal address, including, for example, our domain, which I just renewed, which is tied to our legal address, our billing to the Governor's Center, and so on. So there's a large number of things where having a actual street address matters, not a PO box, but an actual street address. So with the assistance of Audrey, we've been searching for the last few weeks, and we think we have a potential, if it meets the expectations of the board, a potential location which could help us have a street address. So some of you might be familiar with an operation called Startup, which is a shared workspace on North 3rd Street in Harrisburg. Startup does a number of different things. It does provide office space for small businesses that don't have their own office space, but we don't need that. What we need is a street address. And one of the functions that Startup will provide as a vendor is a mail service and the ability to use their street address as our legal street address. That includes, by the way, the receiving of our mail, the opening of our mail, and the scanning of our mail. So those are all things that Startup will do as a service for the authority. The cost is not extreme. I'll just give you what it is. There's a startup cost of about $40 to get started, and then it's $95 a month, plus the postage for the forwarding of the mail. But it's extremely important. We did find other vendors who would provide the service, 3 other ones, in fact. But the key is the other 3 would give us, as did Jeff Engel, street addresses that are not in the city of Harrisburg. And so the one benefit of using the Startup address, first, they provide this. Second, we'd be supporting that important local business. But third, they also would provide us with that 3rd Street, that North 3rd Street address, which we could use then as our official address. I don't want to have to keep moving. It's a pain with the bank accounts and everything else to keep changing our legal address. So only if everybody's comfortable with that, and then hopefully we wouldn't have to change that again, if ever, and we could just keep using that address going forward. So with that, I'll turn it back to Audrey. What I'm looking for is permission from the board to, over the next month, migrate our legal address from Jeff Engel's office to this location on North 3rd Street.
I don't think we need a motion for that, but I would ask my fellow board members if anyone has an issue with that or a concern with that. Shaking heads works.
No.
All right, consider that your approval, Jeffrey, to proceed with that.
It's recorded, so I'll hold you all to it. So
That's right.
I
That's
will
right.
make those changes, and I'll let everybody know when the change is in effect. It will take
Right.
it will take a few weeks, if not longer.
Thank you. And also, once we re-enter the world as we knew it prior to last year, it would provide a place for Jeffrey to roost.
Or for us
he-
to meet. They even have meeting spaces which are
Okay.
available to the public. Also, I will suggest that probably at sometime in the next month, we might have to re-sign our bank signature forms for our checking account. Because to change the address, we might have to do that. We'll mail it around or something.
All right, thank you, Jeffrey.
You're welcome.
So what a difference a month makes. Less than 2 weeks, we changed course and are re-engaged with the city. It provides hope that we once again get moving on the important initiatives of the ICA. First on the list was the appointment of Dan Connolly, which we talked about before. The second was the revelation that the city, contrary to prior legal notification, had been working on revisions to the city, to its 5-year financial plan. And they delivered this document on February 19th. The revisions respond to the concerns that the ICA had shared with the city on December 22nd, and we will discuss that more in the next item of business. Thirdly, the city came back to the table to restart negotiations on the intergovernmental cooperation agreement between the city and the ICA. We'll have a short update on that from General Counsel later. As we move into the next item, which is a discussion of the revisions of the plan, Dan has agreed to answer any question the board members may have. It's been a short amount of time that we've had it. I personally have not been able to dive deeply into it, but certainly there are things that maybe everyone has seen as we've reviewed it, even cursorily. And before we do that, I think we need to rectify authorizing a new deadline for the city's submission, which would coincide with the February 19th date when they submitted the new documents. So I'd like to open it up for discussion and then consider a motion that would do that. And that really sets the frame to make sure we are once again in a time-honored fashion of call and response. Doug?
Thank you, Madam Chairman. I echo your appreciation for the city coming back to the table, and Mayor, thank you. And I see Mark and Neil Grover on the line as well. I, like you, Madam Chairman, I have been through the plan. I haven't read every line in great detail, but everything I've seen, particularly the touch points that we've been looking for, I think the revisions to the plan have been responsive. I also understand from the city that even though statutorily we need to treat this as a final plan because of the deadline dates and so on, the city has an intent as the year progresses for this and then for the subsequent plan that's going to be introduced at the end of April to make regular updates as circumstances warrant. And so that makes the plan a living document. And then later on the agenda, we'll be talking about the Intergovernmental Cooperation Agreement, where it talks about us regularly corresponding and chatting with each other as circumstances change, as the city has new proposals to bring, or as new issues arise for which we are obligated under statute to render advice and counsel, that we're going to have the opportunity to do that. And so with that, if it's appropriate, I would like to make a motion that we retroactively extend the response window from 15 days to 60 days. I think that falls in the timeline that you're suggesting. Part of that motion is also that we rescind the finding of non-compliance and make an appropriate communication of that fact to the Commonwealth of Pennsylvania pursuant to Act 124.
Could I ask for those as two separate motions? I think that would keep it cleaner.
All right.
And so we are looking for a final document that will stand as the 2020 revision to the financial plan. I agree that it's certainly a living document. So motion on the table to retroactively extend the December 22nd deadline, 60 days, which I think would have been Monday or something like that, and thus the 19th fits squarely in that.
I'll second that motion.
Any other discussion? All those in favor say aye.
Aye.
Opposed? Motion carries. And so now on the table, which we can discuss now rather than later, if we like, is the motion by Doug to consider this submission a sign of good faith, and therefore, even before final approval, notify the Secretary of the Budget of the certification. I guess if we decertify, the opposite would be certification of the city back into compliance. Did I capture that?
Yes,
Doug just moved around.
that's correct. Thank you.
Okay.
I'll second that one as well.
Any other discussion?
Can I just clarify that that would also authorize us to send correspondence notifying the parties that they are now in compliance?
Correct.
Yes,
If,
please.
motion that Jeffrey and I can work to get that done.
Thank you.
I think I had a second, so it's all those in favor say aye.
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 Opposed? Motion carries. Great. That took care of something future in my comments, so that's great. So we're all set. And so now I'd like to move to the next item on the agenda, which is the discussion of the submission that we had as much as we can. And I think as we've done in the past, what I'd like to do is after the meeting is over, as people begin to review, would you please send any of your findings, anything that you see that you'd like addressed or questions to Jeffrey, and he will collect all of them and work to get that shared. So I'm going to turn it over to Dan if you wanted to say anything in advance. If not, we can begin questions.
Sure. Well, you just want to give maybe a high level review of some of the revisions, the difference between what you received on the 19th versus the previous draft. And, since we had a decent bit of time in between the submissions, we didn't want to have too stale numbers. So it's updated with 2020 actual results, the 2021 budget, and the reallocations. Every year the city makes adjustments to the budget based on carryover expenses. So those are all reflected in the new document. I think you'll see that the 2020 year-end fiscal position is much stronger than it was even projected in previous versions of the plan. Not altogether surprising, because we were generally conservative in nature when it comes to those projections, especially in a COVID type environment. But we ended up with a fund balance that was particularly strong, and adjusted projections going forward accordingly. There's also a revision to some of the plan of finance language and initiatives in the plan as well, which moves the prospect of a financing from 2022 up until this year in a couple different strategies to address that, which once the city and the professional team has decided on a final plan, finance, and course of action, we can put a little finer point on it, and that would probably be one of the changes that would be reflected in the next submission in April. But that's definitely a change that is in this plan. And actually incorporating those changes to that plan of finance presents a stronger overall fund balance and fiscal position as well. So those were the higher level changes. I mean, Doug mentioned earlier, there's a lot of other changes that were responsive to specific requests from the ICA as well. But that's a high level overview. Jeff and I touched base before this meeting, and I know that he once thought it'd be beneficial to walk through the neighborhood services fund, and I can do that now, or I can do that after questions. however you want it. I think it's another item down on the agenda. However you'd like to proceed.
The members find it beneficial just to have Dan comment on that so that it integrates it into a whole before we ask questions in case
Mm.
some of the questions. Yeah, so we will take you up on your offer, Dan.
Sure.
Before Dan starts, do you
Yes.
want me to try to share screen and see if I could bring up the Neighborhood Services Fund table from the new plan, or not even try?
I the last time it was a little disastrous, so I think we're probably good with it, with Dan just discussing it.
Sure. Well, when you, if you don't have your fresh copy of the plan open in front of you, when you get to it, it's section 8.1. And I'm just walked through, I've been very, and if I'm going too slowly or going too simply, I apologize. Just going to try to, go right down the line. The Neighborhood Services Fund, it was established in 2016. And of course, it accounts for revenues and expenses associated with the refuse collection and disposal services in the city, and now there are partnerships with 3 other surrounding communities. It serves residential, commercial, industrial customers. The fund also accounts for Parks and Rec maintenance and service, road repair services related to the facilitation of collection and disposal services. The primary revenue sources for the fund are derived from refuse collection and disposal fees that are charged to the customers. The refuse collection fees were about $4.5 million in 2020, and disposal fees were $10.5 million. So that $15 million in total, about $705,000 of that was from Steelton Borough. There are other revenues that go into the fund, demolition collection charges, investment income, medical contributions. But of the total revenues, 2020 revenues of 15.9 million, about 15 million were those collection and disposal fees. On the expense side, the disposal fees to the city are the primary cost driver. Those are the charges that the waste manager will charge the city to haul their trash there. That was $6.3 million just for the city, just for trash, approximately, and about $6.8 million total when you include Steelton, Paxton, and Pembroke. Personnel costs are the other key expense driver of the fund. That's about $6.1 million budgeted for this year, which accounts for accounts for 7 additional full-time equivalents over 2020 levels. The fund also accounts for capital expenditures, which includes expenses for vehicles, building maintenance, other capital equipment. There's $1.9 million budgeted in 2021. That includes a good bit of that is rollover from last year. I think about 400,000 or so. But on a cash basis, 1.9 million in capital expenditures for 2021. And the city has identified capital needs and the funding sources going forward through 2024. For next year, the capital expenditures budgeted for 1.6 million, and then it tapers off in 2023 and 2024. They're about $900,000 each. So it is a declining scale. The total expenses in 2020 were 17 million, and the budget this year is 18.9 million, in part because of the carryover and the additional FTEs. I noted the kind of tapering of the capital expenditures, and the approach to CapEx in this fund has been a deliberate management prerogative for a number of years. When the city went through the process of evaluating how those services were delivered, in short, outsourcing it or keeping in-house, the city decided to keep it in-house, apply fund balance to address what was a lot of deferred capital needs and the accumulation of years of disinvestment. So it required the allocation of fund balance for that purpose. They're, going forward, managing it properly, and I think, the city has done a strong job here. It's a matter of keeping up with these capital needs, identifying the funding sources to support those needs, and just on an operating basis, making sure that your revenues and expenses are going in the right direction. So there were some changes in this fund compared to the last draft. I want to explain what those are as well. We eliminated a $300,000 transfer from the Neighborhood Services Fund to the General Fund. This decision was made after considering past issues with the city transferring money from one fund to the general fund to artificially support the general fund. We want to avoid that entirely. So not only does this help, keep money to support the neighborhood services fund fiscally, but it also just makes for a cleaner accounting for the general fund and the neighborhood services fund altogether. Another key change, and this is the key improvement that helps sustain that kind of budgetary structural balance, a more assertive approach to improving collection rates. Right now, the collection rates for the funds, sending out refuse and disposal bills to the customers, collection rate is 85%, which is really quite low. Most communities target a minimum of 95% for any fee or property tax. So 85% is well below that. Not all communities get to 95%. It depends on circumstances sometimes, but that is what the goal should be. Moreover, that 85%, that's not just current fee collections. That's combination current and delinquents. That's not separated. So the original plan just had a very conservative goal of getting to 88%, which would be incremental revenue of $500,000. These new projections project out to 93% collections, again, combined current and delinquent, certainly not by next year, but by 2023. And that makes a material impact going forward on the top line revenues and goes a long way towards balancing the budget in the long term. These new projections also take into account fee escalators in Steel and Paxton and the Pembroke contracts that weren't in the previous version. That was just a correction that was made. So there's a little bit more of an upward sloping revenue stream for there too. So those are the key changes. The city isn't just saying we're going to improve collection rates and then magically hopes that it happens. There are a number of strategies that they've been working on already for a good amount of time, whether it's enabling online bill payment, increasing mail and phone communications with delinquent accounts, encouraging payment plans, possible forgiveness for penalties and interest, kind of an amnesty program. The city has not engaged a third party for delinquent tax collections, but that is up for discussion. And there are other enforcement mechanisms that are being considered. This collection rate issue, I think it's fair to say is a low-hanging fruit type initiative. That said, there are some unknowns that the city is still working through to see, how realistic is it to get to, hope 95%, but if it's only 93% or 92%, so be it. And everybody's, trying to be realistic about all that. The question of okay, well, what if, what is now in the projections a pretty strong increase because the collection rates, why, what happens if that's not achieved? Well, the revised projections also show a very steady fund balance that provides cushion. So you're certainly not going to have a surprise cash shortfall. If we get 2 or 3 years into this process and the city is simply not seeing the results that it needs to have sustainable change, positive change, other initiatives will have to be discussed. But there is a safety net in terms of having the financial flexibility to move forward on this course before a more drastic change is considered. I will say that the projections do not include any rate increases for Harrisburg residents, and I think the city would characterize that as a last resort sort of corrective action, if you will, considering relatively high fees that are already in place, and frankly, it could be one of the contributing factors to a lower collection rate. So, that's certainly trying to be avoided. That's kind of a summary of where I was going with the fund. Hopefully, I didn't talk too much and was responsive to some of the questions you made.
Not at all. Thank you, Dan. So I will open it up for questions from my colleagues on the board, and just feel free to chime in if someone else isn't talking. Doug?
Yeah, well, let me start out by saying thank you for the update and the updated information. I think it's presented very well, and I appreciate your remarks. I also appreciate the added detail in Mark Woolley's cover letter. Just a threshold question: the 3.6, 3.78 fund balance that's projected in the out years, is that intended to be a target fund balance over the longest term?
That equals to a little bit more than 20%
Right.
of fund balance, which is, I think it offers cushion. If you go by the city's overall general fund balance policy, which is 5% of expenses, that's well exceeds that. I would certainly, once you get up below 10%, then start asking the real hard questions, I think. But we're certainly above the general fund balance target. This is a level that got us to, revenues and expenses increasing at about the same rate going forward, and with a pretty strong fund balance. But if there are unanticipated deviations from that, I think they can go below that 20% mark.
All right, thank you.
Follow-up question to that. One of the things I looked at was just the chart itself. I noted that the debt expense disappeared
Yeah.
of this version from the version that we'd gotten in December, and that's 700,000.
Well, it's in there. Let me explain. What we tried to do was on the adopted budget, if you go in the back, they're all the list of capital expenditures, and that's listed as a capital expenditure. The lease purchase, the debt expense is a lease purchase expense. So it's actually our intention to try to make it consistent with the other public documents out there. So it's a simple spreadsheet reclassification from debt expense to capital. It's reflected in the projection still.
My only comment would be a footnote would have been right on target right there. Any other questions, comments? Ralph?
Dan, going through the key changes that you highlighted, the first one was eliminating the transfers from the Neighborhood Services Fund to the general fund. Can you talk about that a little more? For example, you're talking about initiatives to improve collection rates. Those initiatives are going to be conducted by employees who are and postage and expenses out of which fund exactly?
It is the general administration of the city.
Right. And other employees and functions that are paid for out of the general fund are supporting the neighborhood services fund. So they're costs of the business activities in the neighborhood services fund. So it just seems like appropriate managerial accounting has to assign a quote unquote like overhead allocation. And that would be the purpose of the fund transfer back to the general fund to help compensate the city for the overhead for administering the neighborhood services fund.
Yeah, I think the city is taking the approach that, yeah, it's its own separate fund, but it functions similarly to a lot of other accounts and departments that don't charge back any managerial fund either, whether it's IT or financial management or public works or so forth. It's its own separate entity, which is good from kind of a managerial analysis point of view, but it's not taking up any other management resources above and beyond that of any other department. So that was the thinking there. And also, as I mentioned, there's kind of that history of, frankly, transferring stuff from a sewer fund to a general fund is, there are a whole lot of other issues beyond that. You're simply not allowed to transfer anything. But to, kind of make the distinction, that we're simply not going to transfer this anymore to avoid any doubt of trying to prop up the general fund was part of the thinking here too.
But
Yeah, I
Dan,
think the opposite. I think the opposite could be happening, that the general fund could be inadvertently, through this reasoning, could be propping up the neighborhood services fund. Talk about the billing that takes place, all that paperwork for the thousands of individual accounts. All the employees and down at the Treasury office are spending so much of their time, and they're being paid for out of another fund than the one that's recording the revenue related to the receipt of those receivables. So that would be really a prime candidate for an allocation of the overhead burden, and it should be charged to the fund where the business activity takes place. It really is a more true representation of the cost of administering the fund that way.
I mean, the city's kind of made a decision to account for it as this way for now. Maybe be reconsidered in the future, but I think the objective was to, they've been weaning themselves off that transfers for a while, and I think that it's going to be eliminated going forward.
I had one or two other points. Kathy, did you want to comment on that?
just as a follow-up to Ralph's point, Dan, isn't this the only fund that involves something other than the city of Harrisburg?
With maybe specific customers, I'm sure that there are MOUs the city has with the fire and police department. I don't know that specifically. Maybe it'd be better for the commissioners of those departments to talk to that as well. I think there are other, even if there aren't formal intergovernmental cooperation agreements, there are some collaborations going on between Harrisburg and other communities as well. It's difficult for me to answer that cleanly.
Is that something we can continue to look at in terms of the other two municipalities that are now using these services?
An administration charge?
Yes.
I'm sure the city can look into that. I don't want to get too far out over my skis here as a financial consultant and step into the elected official or manager role, but I think that is something that can be considered going forward.
And secondly, there's a figure that's sticking in my head of something like $9 million that the city treasurer believed could be recovered from primarily commercial landlords in debts owed to this particular fund. Is there any attempt to recover any more of that money?
I can't speak to the $9 million specifically, but I know that every time I bring up delinquent accounts with Mark and the staff, they kind of start foaming at the mouth. So if there's $9 million or any significant amount of money out there, I think they'd be very interested in looking into that.
Okay, because that obviously that's a large number in terms of what we're talking about. Thank you.
Ralph?
Dan, thanks. Yeah, the second key change you talked about was improving the collection rates. Just some further discussion on that. Why is the goal to improve it to 93% by 2023? What takes 2 years? What are the activities, and why is it that it takes 2 years for those activities to bear such fruit? And related to that, there's an enormous, and to the tune of whatever that is, right, in the scale of, in the order of magnitude of $9 million, there's an enormous current past due amount. And how can those be accounted for in the plan?
The $93 million, the 93% was, if 95% is what the collection rate that most municipalities target, 93% is a little bit more conservative. Is there a little bit of arbitrariness to that? Sure. We're trying to, maybe not shoot for Mars and up at the moon type thinking. Why 2 years from now instead of next year? To give more time for it to phase in. I think it's realistic when you consider that this is not just current collections that we're trying to get up to 93%. It's current plus delinquent. I think this is very achievable. But we don't want to make the numbers look any, boost them up any more than they already are. I mean, and if there is a $9 million delinquency out there that, it could be reflected in even a stronger fund balance or stronger financial performance, and all the better. Then these projections are even more conservative than they look right now. As far as some of the activities, the primary one is Mark working with his team on a communication strategy to reach out to delinquent accounts and figure out twofold, start a pattern to, make it easier for them to pay, whether it's the payment plan or some sort of amnesty. And also there's a little bit of grunt work in determining what accounts out there are collectible or not. There's a little bit of unknown there. I think the city believes that most of them are collectible, and it's not going to be wiping away a total slate there by any stretch. But there is some paperwork that needs and analysis that needs to be done there as well. I think I mentioned some of the other strategies included, determining new enforcement measures, maybe potentially bring a proposal to council to allow the city to cite delinquent holders a little more easily. Communication strategy, the online bill pay, looking at the timing of when bills go out, whether it's on a monthly basis or a quarterly basis. There are a number of different strategies that the city is looking at.
A couple follow-up questions. The projections that you have for revenues currently, do the revenues include late fees? Is the city recognizing late fees when they're accruing them as revenue?
I think it's all going into the same bucket right now. Current, all refuse fees, whether they're current or delinquent or penalties, are going into the same account.
But we've heard sometimes about the city's method of budgeting, which is a modified cash basis. And so if the penalties are not being collected from these long past due accounts, I wanted to verify if you're actually including those in your revenues.
There is a single line item for these fees, and I think they're all taken care of in there. And when we do our projections, we forecast out based on that big lump. if we're able to, or the accounts are able to distinguish them even more, and we can get a little bit more fine detail on that, we'll, we can reflect it that way in the plan going forward.
Okay. And then on the revenue projections, could you clarify something? When you're talking about improving collection rates, you said something about not just current accounts, but also past due accounts. So for example, in a forecast for 2022, does this revenue forecast imply that there will be a collection of the past due amounts and then recognize them as revenue in that year?
Right now, like I said, there's no distinguishing between current and delinquents, at least in the account item in the chart of accounts. So when I talk about an 85% collection rate, means we send bills out, let's just pick a number, you take the number of accounts times the rate, and it works out to $1 million. The budget reflects $850,000. What it collects during the year, whether it's current or delinquent, goes into that bucket, and the target is not to collect $850,000, but $930,000.
Right. So, so the question is, on that forecast, does the forecast assume that 900,000, or does it assume 900,000 plus collection of prior years past due amounts?
Just the lower number. So
the lower number.
So if you get more, it's I don't want to call it gravy to the fund, but it improves the position. It'll be a better case than what's shown in these projections.
Right. Something that we can, a general comment here for everybody, something we can consider in our feedback upon review is if the city has a narrative of an initiative to collect that $9 million order of magnitude number, if there's an initiative there to determine how much of that's collectible and seek it, that we would, similar to these forecasts, that we would also want to keep an eye on those and see how those help improve the fund position, because clearly that assumption, that collection rate, is make or break for this fund, right? The collection rate over the last 5 years has not been good enough, so it has to improve just to hit these projections only, which is essentially balancing the revenues and expenditures even at these rates. So it's really make or break.
It's make or break, but like I was describing, there's a lot of kind of like the lower baseline end of what we're talking about. I mean, there's if there is a $9 million collectible and you get 20% of that, that is a big improvement. 93%, when municipalities talk about 95% collection rate, they're just talking about currents. We're talking about 93% of current and delinquent. So there's a lot of room to grow here. I mean, no doubt, and I think the plan is pretty upfront. And I try to be pretty forward in the presentation, saying, yeah, that this is a more aggressive collection rate improvement than what we showed in previous versions. But I think it is still realistic, and there is there is some mitigation strategies out there that can accommodate not quite hitting that target.
I know that Dan Miller has had a proposal out there for several years, which I would hope you would consider or coordinate, at least so that there's not duplicative work going out there. That was just a comment. Other questions, other topics? One of the things that I read in the narrative was the comment about how to pivot, maybe depending on what effect COVID has, was that the city budgets its personnel costs based on every vacant position starting on January 1, and therefore there are big sums of money that accrue each year. And it was my understanding, it was used in the narrative saying that could provide the flexibility, but it was my understanding that City Council had suggested, and the mayor had agreed this year, that all those funds would be looked at quarterly, and they would be designated to projects that would have a direct impact on the citizens of Harrisburg, such as blight remediation or other projects. Did I misunderstand that?
I'll be honest, I'm not quite familiar with that discussion. What the plan means by that comment is that if there's a full year of salary budgeted, but somebody isn't hired until the end of March, say, the real cost to the year is 75% of that salary, not 25%. And my apologies if you ever, I'm not getting to your issue. It's the idea is that there's like a little bit of cushion built in, at the front end of the budget, so that if we get to, a couple months out and things have really not turned out as everybody hopes with the pandemic, and there's more revenue constraints, first of all, there's some budget kind of relief from not having that person on for the first 25% of the year, and the city could reconsider it. Does that address?
Well, I think we just need to look at it. It was my understanding that there's been this over budgeting over the course of many years, leading to excess money. And I believe it was City Council said several years ago, all that money should go to debt relief. And I think this past year, I thought the new negotiation or the settlement was that those pots of money would be reviewed and it should be reallocated. And it was during one of the budget hearings. And I would just suggest that we research that and be mindful of if that was a promise made, that we stick to it with City Council. So just a comment, or just to consider. Other comments? And again, I think all of these issues as they come up, please jot them down and get them to Jeffrey, who can seek additional answers as needed. Kathy? Or,
Yeah.
well, in that case, just we'll get to our work. Thank you, Dan. And our next step as the authority will be to respond to the city within the 15-day window that is currently allotted within the Act. To do that means we really have to turn some attention to this quickly. And I would like to recommend that we aim to schedule a special session, a special meeting on this topic on March 5th, which is a week from Friday. And if members agree, I would ask Jeffrey to poll everyone to see what time would work. Jeffrey has a comment.
Only that I have a meeting from 2 p.m. to 5 p.m. on that day, but I'm otherwise free.
Well, the good news is, Jeffrey, you and I could become a majority because I'm out of commission from 2:45 until 5. So we look to the rest of you to perhaps find mid-morning time or something, but Jeffrey will be in touch. And if not, we'd have to make it a Friday evening affair.
I think we'll be fine. And this would be for the purpose of just evaluating the recent submission of the 5-year draft.
And also helping to cement our response to the city.
Got it. I'll send out an email to the members.
Okay, so we will move forward with that. And we covered, if anyone is following the agenda, we covered the presentation of the Neighborhood Services Fund, so we leapt ahead. And I'd now like to ask Anna Marie if she wouldn't mind giving a quick update on the status of the new agreement discussions.
Sure, thank you very much. I have provided the solicitor, Neil Grover, who I see is on this call, with the revised version of the agreement that was originally provided, most recently provided, let's say that, from the city. I talked to each of you individually throughout this. I read all of the prior material, which I picked up from Jeff. So I had a sense of the concerns of the group, as well as, I hope, the needs of the city. And what I gave to Mr. Grover was, I hope, to be a way through this mess. In short, it does a couple things. We added some definitions. It seemed to me, as I read all of the agreements, that some of the contention might have been driven by imprecision in the language. So we added a few definitions so that we all knew what we were talking about when we said things like capital project. What does that actually mean? Are we talking about the same things? So we added 3 or 4 definitions. Most of it tracks pretty clearly with the statutory obligations. So things like this, the authority has the ability to request additional information. That's statutory in about 5 or 6 different places. That's also in the agreement. We specifically mentioned that the purpose of this is to foster cooperation. I don't know that you really need to put that in an agreement, but it seemed that it was a good idea that everybody state it clearly so that everybody remembers it in case things start to break down going forward. We ask, and the city would agree if the language flies, we ask that the city agrees to work towards a GASB compliant budget and accounting. We don't put a timeline on it. We don't tell them how. We just ask them to commit to work toward that process, which I'm sure they're probably doing anyway. I would hope they're doing anyway. We did make a few things. I think under the statute, for example, one of the things that seemed to me to be an overreach is it says things like the city shall provide the authority with all records. Well, the authority is much too small to deal with all records. That's a very heavy lift, both for the city to do and for the authority to review. So it seemed prudent to define exactly the kinds of things that you want to see very clearly. And so we did do that, by dollar limit or type. And so it would probably be a very small number of records in comparison to the way the statute reads anyway. So we did that sort of thing. And then we asked for, in essence, quarterly reviews of, for example, the economic development plan and the progress toward GASB, just to keep us on a quarterly basis, to keep the authority in the loop as to what's going on. And, is progress being made? And if it's not, how can we help? What do you need? What issues are you having? So I'm hoping that it's viewed positively, because the intention was to just try to tighten it up a little bit and make it more understandable for everybody without imposing upon the city extraordinary obligations that don't necessarily help anybody solve this problem or work through these, work towards these goals. And Neil has it now as of yesterday, so I don't expect him to have had a minute to look at it, but he got it yesterday afternoon.
Thank you, Anna Marie. Any other comments that board members would want to add? I know Anna Marie will deal with Neil on a continuing basis and inform us as needed. Moving on, the next item on the agenda was, or is rather, sorry, an update on the 2019 audit report, and I did not misspeak. It is the 2019 audit report. We met as guests of the audit committee on February 11th and heard from the managing partner, Boyer and Ritter, as he gave us a summary. It, from my perspective, it was a little sobering. And one thing that I might suggest would be worthwhile is for us to invite, and can't see Mark still here. Perhaps this can be an official invitation to attend in our March 24th meeting, perhaps to review his plan for the single audit for the governmental area, the recommendations that he presented in November of 2019 to the board as ways he thought he could address the reasons for the qualified opinion that year, which the city received again this year. Other comments that board members may have observed during that meeting or suggestions how we might best follow up?
Has there been any update on the filling of the Director of Finance position that's been vacant for the city? It seemed like that had a large part to do with increased workload by the remaining employees, and it seemed to cause a delay in the completion of the audit. Maybe sounded like some of the folks in the city were putting in a lot of extra hours, and I think if there's a positive takeaway there, the citizens should know that they have some extraordinarily dedicated people working there in the administration. I mean, that's an extraordinary level of commitment from the folks there who look like they were putting in all the extra hours to help complete it. But sorry, is there any update on the filling of the Director of Finance position? I don't know, Dan, if you know, or if anyone from the city here knows.
I'm not able to give an update on that. I think Mark is leading the hiring process.
And perhaps we can ask for an update on that, or perhaps Dan, do you see yourself in any way playing a role in remedying some of those bottlenecks or findings that were mentioned?
Probably not the findings specific to the audit. They were mostly kind of grant administration related. In terms of helping kind of with the shifting workload as the finance director position is vacant temporarily. And I've been working with Mark and his team to fill in on different finance functions, whether it's these projections, helping out with the budget and so forth, which hopefully will leave other people to address those findings.
And I would think that's really important this year as we look at the upgrade in the financial software migration. Any other comments on the audit? And if not, we near the end, but first, is there anything from the board members that we have not talked about or addressed that we should be, as in other business? And if not, Jeffrey, I would ask if you have any public comment, please come in.
I'm waiting one more second to see if my chat box lights up with any comments or questions. I'll use this opportunity to note that we have a website and it is fully up to date with relevant documents and information for everybody who wants to read about our stuff. No, we do not have any questions, Madam Chair.
Okay. And I just will turn to the mayor, Mark, and just say that what we've done is during this time of COVID, we have turned to the written comments and the public comments. So in future, certainly I would ask you, want me to recognize you for comment, please just let Jeffrey know. No pressure, but just putting that offer out there. And officially we are at the end of the meeting. And so I would ask for a motion to adjourn.
So
So
moved.
moved.
Okay, Kathy, can I get Doug?
Kathy,
Or
I'll second.
okay, great. All those in favor say aye.
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 Any opposed? All right, thank you, everyone, and thank you, Dan, so much for
Yeah.
joining us, and everyone
Dan.
else for coming.
And I will let everybody know when the special meeting is scheduled, so that we'll send it out to the distribution list. So thank you.
Excellent. All
All
right,
right, take care,
Thank you,
everyone.
everybody. Nice, looking forward to working with you.
all right.